Fiat currencies are imploding, causing Bitcoin and other hard money commodities to rip near all-time highs. We take a look at why commodities like gold, copper, silver, nickel, and Bitcoin are all ripping higher, and why only one of these commodities has a fixed supply with structurally increasing demand, causing the long-term price prediction of Bitcoin to be of greater value than the other commodities. How soon will Bitcoin hit an all-time high, like gold or the S&P 500? Let's find out. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. In the third quarter of the Western Conference Game 7 semifinal between the Nuggets and the Timberwolves, the Nuggets imploded while the Timberwolves exploded, erasing a 20-point deficit and outscoring the Nuggets 60-37 in the second half. You know what else is imploding? Fiat currencies globally. And how do we know this? Well, hard money indicators are exploding right now. Commodities like silver and nickel are up over 12% in just the last week alone. Spot gold is up 18% year to date, 23% in the last 3 months, and 35% since last October, touching an all-time high of $2,450 per ounce of gold and outperforming the S&P 500 this year, which, oh, by the way, also hit an all-time high of $5,235. Commodities are on the rise and ripping towards all-time highs because tried and true indicators of inflation are screaming red hot right now. Here's one example. Freight rates are soaring to levels that we haven't seen since COVID, when the world was artificially shut down. Ryan Peterson, CEO of Flexport, a global shipping company, gives us a great thread on exactly why this is happening. In the simplest terms, rates are exploding because freight shipping is one of the most inelastic markets in the world. Brands don't ship more things when rates are low, and vice versa. They can't afford to not ship things when rates are high. So they pay the prices at where they are and pass the excess costs on to consumers. Let's dive in a little bit more. The contracts between all unions on the East Coast and in the middle of the country are set to expire September 30th. Over the last few months, we've been seeing major accidents at bridges and ports, like this one in Baltimore. Unions are going on strike. Ports like Panama are getting congested. Oh, and shipping routes are now much longer because of ongoing conflict in the Middle East and terrorist attacks in the Red Sea, causing people to take different routes to ship the same goods as they did before. So what does this mean for the economy and everyday people? You guessed it. We've talked about it a lot on this show. Inflation. Inflation like a cheeseburger at McDonald's being up 215% over the last 5 years. Or the Nachos Bella Grande at Taco Bell being up almost 80%. So what are nation states and sophisticated investors doing? Well, they're hoarding commodities. Take China, for example. At this point, typically in every year, China tends to dump its copper excess onto the market. But what are they doing this year? Well, they're hoarding that supply of copper. But people who are betting on this long-term trade tend to be wrong. And commodity and energy expert Javier Blas explains this really well if you don't follow him online. Typically, when there's a structural imbalance between supply and demand, and specifically with commodities that are used in industrial processes, or with globally induced mandates like going green by 2050, well, when the price of a commodity goes up beyond a certain level that's too costly for production, producers and manufacturers typically sub out that commodity for a cheaper one. So if you're using copper, you might use aluminum as one example. Or miners that actually produce these things tend to bring more supply online when the demand goes up. Over the long term, this mitigates the long-term value that you can have when playing commodities markets. The same is true for gold. In just a few months, with Bitcoin being approved for spot ETFs on January 11th, it has surpassed investor interest in demand that gold had with the same ETF products, and it took 20 years for that to accrue. 71% of advisors have little to no exposure to gold in their portfolios. This is very different from Bitcoin, and people who are close to the market, like CEO of Bitwise, Hunter Horsley, he predicts that institutional interest in Bitcoin being added on Wall Street and on large company balance sheets is set to explode within the next year. Check out this interview that's dropping between him and Natalie Brunell.
So you worked at Facebook and Instagram, which now I guess they're one, right? Meta. When is a Meta going to put Bitcoin on the balance sheet?
I think that, wow, that is a great question. I think next year. I think
next year, really? Okay. 2025, that's your prediction.
I think that things are, that's my prediction. I think that things are going to move much faster now than people realize. That's for two reasons. First, the ETFs have provided a construct that is unbelievably straightforward to use. And when we talked about the barriers to people adopting the space, I give you a lot of examples across hedge funds and advisors, but they're all logistical and practical barriers. And so the ETF has taken those barriers substantially down. And there still are barriers, but the ETF has made it so much more straightforward.
Oh, and another thing to add to the pie, Bitcoin balances on exchanges have fallen to all-time lows of just 1.7 million Bitcoin. But hey, this isn't an episode about me hating on gold. Gold is shining right now. You saw what I did with that pun. And Bitcoiners aren't mad. I'm actually happy for all the gold bugs who are having a great year over the last 20 years. But there is also no denying that Bitcoin is a better form of hard money than gold is. It has a 1-year return of 154% versus 23% with gold. It has a 10-year CAGR of 62% versus 6.5% with gold. And it has better risk-adjusted returns. Bitcoin has been the best performing asset in the world 10 out of the last 13 years. Oh, and it also just happens to be an asset where if you actually hold real Bitcoin, you could send $1.1 billion worth of it for a fee of just $7. Try doing that with your gold bars. I can't even ship a thing across the country in less than 2 days with UPS without it being a $90 charge, I feel like. And Bitcoin's price is responding. Bitcoin has touched $68,500 per coin and is up over 3% today. It's poised to continue leading the hard money pack higher. So if you want to trade like nation states, sophisticated institutions, or your crazy uncle who happens to be a Bitcoiner, well, use Swan.com. Because on Swan, your next $10,000 of Bitcoin purchases have no fees. Again, fee-free on your next $10,000 of Bitcoin purchases. And unlike gold, you can take physical custody of your Bitcoin in just a few minutes for free on platforms like Swan.com and other Bitcoin-only institutions. So if you have questions about this or you're a gold bug that's surely going to email me saying that gold is much better than Bitcoin, do so at daily@swanbitcoin.com and I'll be happy to respond. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.